Hello my YouTuber friends and welcome. I have another video to share with you. But before we get started, can I get a thumbs up, and subscribe to my channel? Thank you and I hope you enjoy the video. At the end of the video you can check out how my friends and I are generating crypto commissions and stacking Bitcoin on a daily basis.
It's Matty here with Altcoin Buzz. Hope you're having a great day. If you're tuning in here on Tuesday evening, it's likely that you're looking for an answer. You're maybe scratching your head as to what's happening with the market. Things are not looking great. We've had quite a sell-off very recently, at least at the time of this recording. We're going to take a look at one possible cause for that kind of market activity, and it has a lot to do with the SEC. It has to do with the fact that they have delayed officially the Solid X Bitcoin ETF. We'll take a look at that. We'll take a look at some updates with Coinbase. Today is the day. They said they would have something to announce after all with ETC, Ethereum Classic. We'll look at all of those things, but we're beginning as always on altcoinbuzz.io with this article today by Chris. Blockchain to allow $27 billion annually in savings for banks by 2030. Great little report that I think we needed in light of the unfortunate market circumstances today, but a nice positive piece, a nice study that came out and has all kinds of cost savings benefits in the banking industry for those banks that choose to support and use blockchain. So what is this all about? According to Juniper Research, their research has shown that by the year 2030, banks across the world will realize $27 billion annually in payment processing, payment reconciliation, treasury operations, and compliance. So according to the research in the report, The Future of Blockchain, Key Vertical Opportunities and Deployment Strategies 2018 to 2030, by the year 2030, blockchain technology will be saving banks about $27 billion annually in specifically payment processing, payment reconciliation, treasury operations, and compliance. It is estimated that it will lower costs by 11% for each on-chain transaction. So $27 billion, that's a lot. And I mean, this is annually, this is every single year. So if you add up all those years, let's just say it's a decade for sake of a nice, quick, convenient calculation, that's over $250 billion. That's a $250 billion right there just by adopting this technology. Again, once blockchain has that kind of use case where it's saving people money, once the cost of avoiding the technology is too great to ignore and it's actually a detriment to your business, that's the kind of use case that we want to see. Something that's practical, that's utilitarian, and something that adds to the bottom line of businesses. So this is great. If you want to take a look here at the regions that are going to be most affected, as you can see, Asia has the most potential in terms of cost savings. So you have all the different years here, 2024, 27, all the way through to 2030. $27 billion annually, quite a bit. Quote, IBM continues to demonstrate innovation and leadership across a range of verticals. Over the past 18 months, it has attracted dozens of corporate clients, with deployments now moving from proofs of concept and trial to full commercial rollout. That's a quote by Dr. Windsor Holden, who's a research author of this particular study. So do be sure to leave Chris a comment. Let us know what you think about this. Maybe you're working in the banking sector, maybe you're involved in the banking sector and have an opinion. We're going to link, of course, to the original website, the Juniper website, and their research here. Blockchain deployments to save banks more than $27 billion annually by 2030. Is it enough of an incentive for adoption? Let us know what you guys think out there in the altcoin buzz army. And again, we almost have a daily update now with Coinbase. In fact, today we have two. Like I keep joking, they're taking over the world one step at a time. New announcement from Coinbase. We're announcing instant trading and significantly higher default limits for Coinbase accounts. Starting today, August 7th, we are rolling out the ability to trade cryptocurrency immediately after a purchase. No more waiting 5 days for funds to settle. So depending on where you are in the world, that's typically the waiting period. And if you click on the link here, you can be brought to the Coinbase blog, so blog.coinbase.com. Buy and sell immediately and higher daily limits. Higher daily limits big time. Increasing daily limits to $25,000 and enabling immediate trading. So if you want to read more about this particular update with Coinbase, I mean, that's the gist of it, right? Is the cap and the elimination of the waiting period. But if you want to read more about that, do check out the Coinbase blog. You can take a look at all the details as far as how that works based on your method of payment in the US, whether it's a debit card or ACH or wire transfer. We're going to link to this in the description below. We got to keep moving because we have another announcement by Coinbase. This relates to ETC. So from today, following last week's update about the final stage of testing for Ethereum Classic, ETC, we are now accepting inbound transfers of ETC on Coinbase Pro. Full schedule here. if you're interested in this, you could check it out. But looking at the price of ETC, unfortunately, it seems to be following just about every other price right now. Whether it's a coin or token, we're in a red sea today. Unfortunately, things are down single and even double digits in some cases. Finding Ethereum Classic here, it still sits at number 12. It did go as high as $20 per unit price yesterday. So we're sitting right now at $17.34. Still up pretty substantially from earlier in the week. So if you did manage to invest, basically looking to make some profits off of the Coinbase announcement, then I'm sure you did pretty well in the end, but now it looks like there's a bit of a sell-off, or at the very least, it's following the rest of the market movement, which unfortunately is downward. As you can see, you have quite a few projects, almost without exception, that are down today. So in times like this, we always ask the question, why? And it's the sort of thing that is perhaps easier to piece together in hindsight. And even then, you never have a full story. But we do believe at Altcoin Buzz that this had a part to play in it. So big news from today, actually very recent and breaking at the time of this recording. SEC delays VanEck SolidX Bitcoin ETF decision to September. This may be one contributing cause to the sell-off we're seeing right now. But then again, at the same time, this was always the understanding, right? So we did hear that the August 10th date was going to be the time at which SEC announced whether or not the ETF would be confirmed. But we always knew that it was always even in the disclaimer that it's either then or it's going to be in September, one or the other. And we even got some subtle suggestions that it was going to be in September. So I'm surprised. I don't know, we're still piecing this together, but I'd be surprised if this solely were the cause of this negative market movement. But nonetheless, here's the update. The U.S. Securities Commission has delayed a decision on a proposed Bitcoin ETF, pushing its final determination ahead by more than a month. In an order published on August 7th, officials at the agency wrote that they were giving themselves more time to deliberate on whether to approve what would be the first exchange-traded product of its kind in the U.S. It's also perhaps unsurprising, given that in the past, SEC officials have used the agency's statutory powers to push back decisions on Bitcoin ETFs. As the agency wrote, quote, accordingly, the Commission designates September 30th, 2018 as the date by which the Commission shall either approve or disapprove or institute proceedings to determine whether to disapprove the proposed rule change. So it's been pushed back by over a month, almost 2 months, in fact, over 6 weeks. But there you have it. You can read about all the comments on the SEC website that have been overwhelmingly positive. There's been all kinds of people just in the public sphere pushing for this, leaving positive comments on the SEC website. It doesn't seem like they've had enough time, though, or perhaps they're just delaying it strategically for whatever reason. Check this out. Last comment here. As of press time, the price of Bitcoin has not reacted, trading at around $7,060 per coin, according to the CoinDesk Bitcoin Price Index. So that's at the time of press. But my suspicion is that once this news broke and circulated, that's what caused a drop, because we're down. Total market cap is down about 10 billion, or just a little bit more than that, maybe 11, 12 billion dollars right now. We're not sitting at 7,000. We're sitting at about 6,750. So it's unfortunate that we tie so much value into this ETF decision. I mean, even if this were to get rejected entirely, I don't think that's necessarily a reason to have a big sell-off. I don't think it really affects the underlying value of Bitcoin. However, that's just my opinion.
Thank you for watching. If you would like to see how we are stacking Bitcoin even in a bear market, generating crypto commissions, and using signals, seize the day. Click on the link in the description area below.